Hey, welcome everyone. Tom from Park Avenue Trading here, and welcome to a weekend trade review. And these are some of the things that I do on the weekend actually to critique myself, because even after 30 plus years in trading, I still find myself making mistakes. Always emotional mistakes primarily. But anyway, before we start the weekend trade review, I want to ask you guys, if you like what you see, please like, subscribe, give the video a thumbs up. Google loves that stuff. Don't forget to ring the bell so you get some more some interesting tidbits from me. Appreciate it. So first thing, let's start off with just the review of the levels that I put out for the trading day of Friday, May 31st. If you look at the previous video, you'll see them. I said that there was going to be support at 199.10 for sterling yen, and the resistance, the ice line up top, was 199.80. The break of 199.80 signaled that we should be going up higher, about 50 points, and we basically hit that. Now, we never hit the lower level here. So people say, "Oh, that's all well and good," you know. It's real easy to look at now and say, wow, okay, so I could have bought down here, I could have waited for this to break, I could have actually then rode it up and had a really nice healthy profit. But how would I do something like that? Well, there's some type of trade, you have to come up with your own trading technique. But if you knew that there was support down at this level, and you saw down here there was a pivot point, there's a lower pivot point here, ultimately if you were going to buy anything that was by here, the minimum stop would have to be below 198.99, 199 a figure. So you can go down a little bit and say, I use 14 points from that point downward, so you go like 199.80. Now some people say, well, this is pretty significantly far. It's 10 points away or 8 points away. Well, actually the low is 24, so it was 14 points away. So how would you handle something like this? Well, you could, now again, hindsight is always easy, but there are certain trading techniques that you could use. You could use a very short-term technique. This is a 30-minute chart. You could say, well, I have a pivot point here. Market basically came up, rallied, came back down, didn't come close to this pivot point, which is a strong indication that we're going up, because it couldn't even try to test that little bottom there. But you can say, well, what could I do with this? Well, you could use a couple of trading techniques that I subscribe to real short term. It's like you say, okay, this pivot top right here is an important pivot top. It's also a micro. I mean, we're talking about micro amount, time compression here, because it's only 30 minutes. But you could say, I'm going to buy the breakout if the market basically breaks above this level. Okay, so, and then where would my stop be? Well, it has to be down in here. Okay, so basically you're buying 199, say 55s, and the stop's got to be like below 20. So it's a 30-point stop. It's not a bad point, not a bad risk reward ratio. You could also do, another type of technique where you say, okay, the market closes above this price, I'm going to buy the marketplace on a close above, but I'm always going to be watching what's occurring on the next bar, because I say that the close is king, but the open is queen. And generally, if a market's going to continue right away, the queen, the next bar, will continue in that pattern. Now, what the queen did in this bar was basically become an inside bar, which is another important point like you could look at. Now, here's the thing with inside bar. Generally, people say with the inside bar, if the bottom's broken, it's going back down, and if the top is broken, it's going back up. This thing basically broke the bottom and the top, so therefore defying the law of technical analysis right there, and it caused confusion if you're just looking at a 30-minute bar, and it wasn't really a valid signal. However, the break of the top was a valid signal. Now, there is another technique that you could use. You could say, well, look, here, the breakout occurred above here. The marketplace basically closed here. So I'm going to buy the first close that is above the new previous high. So like right here, this is I'm sorry, the new high. So you can say here it broke up here, it's showing strength. Here's the new spike up. What I'm going to do is I'm going to buy the first close that's above this high, which happens to be this. And then it spikes and it does a nice move up. But obviously, you know, you would have saved yourself you know, 20, 50, 17 pips if you would have bought a little bit earlier. But look, that's you got to choose however you want to handle this. But anyway, going in with the levels, the ice line broke here, basically saying that, you know, marketplace should go higher. Okay, this is the upper boundary. It did spike higher. If you were unfortunate and you bought this, you would have to sit through this. Now, where would the stop be if you bought this? Well, since we broke the ice line, really, you need to go back down to the lower levels in here and say, well, my stop's got to be here. That's a significant, you know, stop loss, you know, for most people. For me, it wouldn't be, but I wouldn't like it. Believe me, I don't like having, you know, positions on like that, because my best positions, I always get them at the right psychological time, and where I get a backlog of profits in there that help me sustain this type of nonsense, which happens every day. And I call it nonsense because it's just the market, you know, and uncertainty of the market is the beauty of the market. And this is all uncertainty, right? But then the next leg up, okay, it was a nice movement up. So if you were long and you were playing on the right side, you basically had a nice windfall. So here were the two levels that were important. Now let's just look at that's the sterling yen, obviously. Let's go to British pound. Here's the British pound. Okay, these were the levels that I put in the day before for this trading day. And you'll notice, I mean, this support level held magically. So if you were fortunate enough to see this, I did not. This was at a time I was not at my trading desk. I think I was sleeping at this time. Touched this perfectly. I mean, you could have bought this and put a stop down, you know, here, 80 against the figures, a 20-point stop, and look at the nice movement you had. Now, I've been struggling with sterling for the last week or so, week and a half, and I even mentioned it in my previous video that I expected sterling to be able to sustain a rally, and has not been able to sustain a rally. So obviously I'm wrong. So for the time being, I am wrong. But you know, it made me intuitively think be sterling yen bull, be sterling bull. You know, but the sterling bull side has not really worked out. Matter of fact, the sterling bull side has turned into a bullshit side. So it really needs to break 128 in order to show any sign of life, really. And it needs to sustain. Now remember, the king, the break of 128 would be, the first bar would be the king. Now you gotta look at the queen, which is the next bar that opens. You know, what is it doing? You know, it's a world of difference between one bar closing and another bar opening. It's just an amazing thing. All right, so let's go over to dollar yen. And here were the levels for dollar yen. Let me see if I can crunch this down a little bit. Right there. 157.90 it needs to get over. It needed to, you know, if it was going to go back down lower, below 156.45. It basically stood within this. It didn't do anything. Okay. So, and let's just look at our final one, euro yen. Euro yen, the level down here, 169.43. As you notice, it touched it perfectly and then rallied right over it, got above the upper ice line, broke it, and had a very nice rally. All right, so those are those levels. I'll put out new levels for you for today is June 2nd, 9:12 in the morning. So it's Sunday, June 2nd, 9:12 in the morning. I'll put something out at the, you know, there's a Sunday kind of intermediary session that I really don't pay too much attention to. I'll wait till actually Japan comes in, and then I'll try to figure out, what levels the ice lines will be at. But going over like the weekend review, and I think this is real important. Like as a trader, basically what I do is all my trades, I keep what's known as a position sheet. And it's everything that I do during that day. And on the top, you're going to see that you have buy, sell, the rate, the price that you did it at, the net, and your average. Now, I keep a personal, an average. It's a weighted average. And if you don't know how to do that, you got to learn how to do that. It's not too difficult, but you got to learn how to do it. Or, I don't know, maybe your platform keeps the average for you. So I have a written position sheet that I have, that I look at the end of the week that I'm reviewing my trades. And then what I'll do is I'll go back to the beginning of the week when I started trading. The first entries that I have for that week, I'll go back to that position sheet and I will plot out my trades. And I'll say, okay, this was sterling yen, for instance. I'll go to sterling yen and I'll say, okay, on Friday, all right, I bought at, sterling yen, wrong one. I bought at 99, actually this was not Friday, it was, well, I don't want to bore you with that, but it was Tuesday. Okay, so the date happened on a Tuesday. So what I'll do is I'll go back to that date and I will frame the marketplace and I'll put in all my buys and sells. I will print the chart out. Okay? And I will physically mark the chart. I bought here, I sold there, I bought here, I did this, I did that, and I will look at my notes because every one of my position sheets have notes. Okay? And like for instance, on this one, this was May 23rd. Look at May 23rd. Why did I sell? Like I actually write, bought a certain amount of, sterling yen. Okay, and why sell some? Yesterday high was here, so I am basically selling a double top. I'm getting rid of some of my position, my long position, at what is called a double top. There's some resistance here, and the high has been 199.585 so far. I think the market needs to break 199.70. Then we're going to travel to 210 again. So I write my notes so that I could actually see like what really occurred that day compared to what my mental biases were for the day. So you have, a record of what you're doing. Now, there are a lot of trades that I catch myself doing that to this day, they're emotional trades and the ones that shouldn't be taken. So those are the steps I do. I print everything out. Then I keep them in a folder and I attach them to the position sheet so I can regularly review them. I could study what myself, like, sometimes how shitty I am, right? And sometimes how good I am. And I want to dissect where I'm weak, and I want to add to where I'm strong. And I look at my trading diary, my journals that are attached to these position sheets, and I read them and I say, well, look, I was really thinking this thing was going up, and guess what? It tanked, but I was smart enough not to stay in a long position. So that's what I do on the weekend review. I think it's really important to do that to become a better trader in anything that you trade. So I'll leave you with that, and please, if you like what you see, like, subscribe, don't forget to ring the bell, head on over to parkavenuetrading.com, get yourself a free little ebook, and I'll see you in the next video. Cheers.